Hello, everyone. First of all, a quick apology. I sound slightly echoey in this room, so I hope you can hear me quite clearly. So good morning, good afternoon, and good evening, and welcome to our first Town Hall meeting. So we are now a large group with over 600 team members. So from Leeds to the Cayman Islands, from Southampton to Singapore, from London to here in sunny Bolton, welcome. And I know Carl, who's joining us, is in Dubai today. So we're also by design a diverse group, and with our geographical spread, it can often be difficult to bring everything together and sometimes to see the connections between us. So my name is Ian Symes, and I'm the Group MD for K3 Capital Group. And I'm delighted to be your host for today's Town Hall, and where you'll hear about, well, how we are operating as one company, how we're all focused on the same small and medium enterprise clients, SME you'll hear talked about, and we're all contributing to an amazing business. As this is our first meeting, we'd really appreciate your feedback at the end to help us improve for next time. So after the session, you'll receive an email with a short survey. Please just take a couple of minutes to give us some feedback. We've also collected all the questions you sent in to us over the last couple of weeks. And at the end, I'll be asking those to the exec team who are on today, but there's also an opportunity for you to submit any additional questions on the Q&A tab on Zoom. You'll see it down at the bottom. So just add any questions as we go along, and we'll try and cover those if we get enough time. Now, before we get started, I will tell you, I hope the technology is going to work today. Obviously, I've got a bit of an echo. And I will tell you a short story about earlier in my career when I worked for a consumer products company, and we had a big client show, and we were actually at several race courses in the UK, including Doncaster. And we had this big auditorium where people came for reception, then there were 400 people to sit in an actual theatre we built with a stage, and the stage collapsed at the end and revealed a large display area. And I'm up there presenting. And I've got the biggest part of the presentation because I'm the marketing director. I'm talking about the new products we've got, a whole new display system we've got for retailers. And behind me, I know I've got the chef Ainsley Harriott secretly back there waiting to surprise guests and do a live demonstration. And inside this auditorium, it was covered in what's called star cloth. So star cloth is like a black drape that goes all around the outside. It's got lots of little LED lights, and it makes it all look nicely finished. Now, unfortunately, that day in Doncaster, it was raining cats and dogs. I mean, it was so heavy, you could hear the rain on the tarpaulin on the top of this temporary building. And I'm there presenting, and then suddenly in the middle of my presentation, I hear this bang, and all the lights go off. Everything goes off, projector, lights, everything. And all there is this little light left on the lectern where I'm standing. And for a couple of seconds, I tried to continue until one of my colleagues very kindly got up and actually said, hey, let's go and get a drink, a glass of champagne first, and we'll continue once the generators got back working. Because unfortunately, the star cloth had got all soaked in rain. So today, I hope we don't have any of those technical problems, but I would like to say a big thank you to the team who put this together. So Anya, Caroline, and also Sonia and Marie, thank you very much. Okay, so let's get going. Next slide, please. So this is what we're going to talk through today. So one of the key things we'll talk about is K3 Capital Group strategy as now a part of the Sun Capital family. And I know we couldn't talk about this very openly before because we were very restricted by stock market rules, but we really want to give you some insight today. So John, who's our CEO, is going to talk to you about the background as to why we've made this transition from public to private ownership. And then we're going to talk about three big benefits it brings to our business. So I'm going to give you a little introduction about Sun Capital. Unfortunately, two of the team who are going to join us today had to be out to the country and they're traveling, so I'm going to present their slides about Sun Capital. Andy and I are then going to talk about the investments we're making in operations. And Louise is going to talk about the investments we're making in people, culture, and your careers. All things that are really important, in terms of all our benefits that come out of being part of this different family ownership. We're then going to talk about two really exciting pieces of collaboration. So Ian and Simon from Quantimer are going to talk about a case study called Cut Size. And then we've got Hayley from Knight Transaction Services and Holly from K3 Tax Advisory are going to talk about a collaborative piece of business they worked on together with the K3 Debt Advisory team. Then we're going to talk about ESG. So for those who don't know, ESG stands for Environment, Social and Governance. And it's a program that Adrian Howes from Quantimer has been leading on. We've also, you may remember, we did a staff survey probably about 2-3 months ago now about your views about what you felt was important about the environment and our impact on it as a community. And Adrian's going to take you through that research and also some of the initiatives we're already starting. And then finally, we're going to have a Q&A with 5 of the leaders from the business: John, myself, Carl, who heads up Quantimer, Andy, who's the CFO, and Louise, who's the CPO. So thank you very much. Please do engage. This is all about you. It's all about helping you engage and understand our business and give us feedback, and I hope you really enjoy it. So with that, I'm going to hand over to John.
Great, thanks Ian, and good afternoon everyone. I just wanted to start up really with a bit of an introduction, but as many of you will remember and know, we floated this business back on the 11th of April 2017. We went from private ownership to a public company listed on AIM. At the time, we had one service line, which was business sales. We had about 95 people, staff. We had 10 million of revenue and about 4.5 million of profit. That event, that PLC status that we gained back then helped us significantly. It helped us to gain credibility, helped us to expand. The business grew, our share price and our market valuation grew. And more importantly, when it came to COVID in 2020, the public markets worked really well for us in allowing us to raise what was north of 40 million pounds over 2 fundraisers that we then invested into bringing brands like Rands, Quantimer, Knight, JEC and others into the K3 group and family. So those additions created a better business. They created a more diversified group, currently 14 brands across the group that have come together and really delivered an exceptional journey of growth in both revenue, in profit, and in all the other measures really that public markets consider as important. So earnings per share, dividends per share, organic growth rates and margins. So in all of those areas, we have delivered something really quite exceptional. And I think we should all be very proud of what we've achieved. Our market valuation grew from 40 million back in April 17 to nearly 7 times that number now. That's because of the hard work, the passion, the dedication, the enthusiasm of everybody that's on this call. And whether you've been involved in the business for 20 odd years as I have, or a matter of months, that input and effort is all going into creating the business and the group that we have today. So if we look at that performance in numbers over on the next slide, you can see from the graphs on page 4 here that our financial performance as a group has been exceptional. It's been ahead of our peer group, and it's been achieved during a period when profit warnings from other companies were rife, market conditions were challenging to say the least. COVID happened, a war broke out, there was an energy crisis, the impacts of Brexit were felt in terms of skills shortages, supply chain issues, cost of living crisis more recently, economic, political uncertainty. All of those things have happened within the timeframes that we look at on this slide here. And throughout all of that, our group went from 15 million of revenue in FY20 to 47 million or over 47 million in 21 to over 70 million in FY22. And this year, targeting to do over 85 million pounds worth of revenue. So a phenomenal growth story in terms of the revenues of the business, and equally with profits, 6.8 million in FY20, not that long ago. moving to 15.7, 20.4, and hopefully if the end of the year happens as we hope it will, we potentially get to north of £25 million this year. So, you know, an incredible growth trajectory in any environment, but when you sit that against the factors that we've just mentioned there, it makes this performance, I think, even more outstanding. If we turn over the page then, and just keeping that performance in mind, we then look at the share price performance, and this is over a slightly different period, but what I wanted to sort of show you here is that you would expect that with such outstanding performance in our business, you could perhaps, and quite rightly expect, that the share price would have continued to flourish as it perhaps had done previously. And that increasing share price then allows the group to do all the things that a growing share price and a growing market capitalization allows you to do. So, you know, in terms of how growth shares and LTIPs and save as you earn rewards come through to staff and reward that performance and loyalty. And equally as importantly, how the company can raise more capital to acquire more businesses to complement the organic growth story that we have, and therefore to help us continue that journey and that sort of continued exceptional financial performance. What you see from this graph, however, is that between a sort of high in September 21 and a low in September 22, so taking a 12-month period there was a total disconnect between the performance of the business from a financial perspective and the performance of the share price. The performance of the business, as we saw on the previous slide, continued to go from strength to strength, whereas the performance of the share price was continually weak across a sustained period of time, and really was showing little sign of improvement in the short to medium term. And with all the challenges that the stock market, or particularly AIM, were facing, we didn't believe that recovery was coming anytime soon. So the situation that creates for us is one whereby the stock market, or being on the stock market, being listed as a business, if we can just flick over and you're onto the next slide, was really, in our opinion, starting to constrain that growth and that strategy that we had. And that's really the crux of why we began to explore alternative options other than remaining as a listed business. So the stock market, which had previously worked really well for us and assisted us in our journey and our strategy of long-term, profitable, sustainable growth, was actually starting to significantly limit our ability to deliver on that strategy. Why? Because, as I mentioned there, we were unable to go back to the market to raise capital for meaningful acquisitions due to that depressed share value that we showed on the previous slide. And to put that into context, if you raise money as we did in June of 21 at £3.50, you can't then, or it's frowned upon somewhat to go back to the market and raise money at £2.20, £2.50, £2.70. So it was limiting our ability to raise capital to do further acquisitions, meaning that really we were forced to look at only smaller acquisitions, which wasn't really ever part of our strategy. And I think the other key thing is, as I mentioned above, it started to impact on the incentives that we were able to offer our people. So things like growth shares, and we had numerous issuances of growth shares at £3, £3.50, £5, £7, all of which, if your share price is moving forward positively as your business performance moves forward positively, are great things for the people that have them. Same with the Save As You Earn scheme. But because of that share price movement and that disconnect between the performance of the business and the performance of the share price, those schemes weren't providing the incentive that they were designed to provide. And I think that really sort of, just to underline that, the issue was not the performance of the business at all. It was the performance of the share price. And what became very apparent over time, and over quite a sustained period of time, is that the two weren't connected, and the business was performing better and better and better, yet the share price just wasn't reflecting that. So that was why we started to explore the avenues of moving into private ownership again. We went through a lengthy and considerable process in doing that. We met numerous suitors that wanted to look at us. And obviously value for shareholders is a big part of that process, but also, you know, our feel of who we wanted to work with, and the you know, the culture and the type of people that we were meeting and getting into bed with, so to speak. And Sun very much came to the fore in all of those areas. So over the page, Anya, thank you. It's just wanted to highlight what we see as some of the benefits really of the transition from being a public company back into private ownership under Sun Capital. I think first and foremost, continuation of our management and leadership within the various businesses and at group level. This was really critical to us. We didn't want wholesale change. We wanted business as usual. You know, the group, as I've just displayed on those previous slides, is performing exceptionally well. And as the saying goes, if it ain't broke, don't fix it. You know, all 50 shareholding managers, directors within our business have rolled a significant portion of their value into the new ownership structure. So all of those people are remaining involved. So, you know, for many staff and people throughout the group, they'll see very little change felt from a day-to-day basis in terms of leadership or line management. And that was important to us. So very much more of the same. From an acquisition point of view, what this gives us is significantly more firepower for acquisitions. And this was a key driver in why we've taken this step. So within this new ownership and capital structure, we've got significantly more firepower to go out and acquire larger and more meaningful in terms of revenue and profit businesses than we would have been able to do out of our cash reserves and our debt facilities as a PLC, because as I mentioned, we weren't able to raise further capital at that share price. We now can do that quite easily, and that allows us to grow faster. It allows us to create a bigger and better business. And for me, and I'm sure we'll come on to that as we go through the later slides, that creates more opportunity for lots more people. And that is part of our strategy ultimately. So investment into acquisitions, very, very much enhanced with this deal, but also accelerated investment into the business as a whole. You know, as a PLC, you are almost expected and even forced to grow in a straight line. You know, they don't like a business to go backwards before it goes forwards. They need to see it performing in every 6-month period. Otherwise, again, further impact on share price. So that often limits what you can do or what you might spend within a certain financial period. And really, new ownership for me allows us to do what's right for the business at the pace that's right for the business, not to do what's right for our shareholders or do it at a pace that's right for our shareholders. So this is all about putting the business first and doing what's right for the business. And I think, you know, some of you will already have seen some of the impact of that investment, or be starting to see it across, you know, areas such as HR and technology. New incentive plans. So I talked about LTIP, growth shares, save as you earn schemes that were heavily impacted by that underperformance of the share price. And the beauty of new incentive plans that we can put in place, and it's often referred to, you might hear the term MIP, which is Management Incentive Plan, but we're able to put schemes in place now that are linked really purely to the things that we control, so the performance of our business. So they're not linked to the share price, which, as we've just talked about and proven, doesn't necessarily track the performance of the business due to lots of outside influences. So any new incentive plans that we can now put in place will be linked purely to the performance of our business, not the wider stock market. In terms of point 5 there, leveraging the operational expertise of Sun, you know, they've done this many times before. To quote them, they've turned good businesses into great businesses. Now, in my opinion, we've already got a great business. So what they're going to do with that? It's going to become a phenomenal business. But we're already starting to see some of the benefits of their involvement. So, you know, from a reporting point of view at PLC level or at head office level, as it now is, you know, we're starting to see a sort of quite a rigorous weekly reporting framework, which I think will be really useful in terms of how we view the businesses throughout the group. More operationally than that, they are starting to make introductions from their network already and their investee companies. So we've seen new client wins in areas such as tax and transaction services from the network that Sun bring forward. So bringing new clients and bringing new revenue into K3. And we hope that as we get to know them better and they get to know us and our services and our people better, then that will only go one way. So hopefully become a significant contributor to our success as well. And I think finally, just and again, this wouldn't be felt by necessarily too many people within the group, but removing the limitations and the shackles of being a PLC is something that certainly from my point of view, Andy's point of view, and those that are more involved in investor relations, etc., it is something that for us will have a significant impact in terms of time and cost and all the sort of sunken investment that went into that sort of reporting back to our shareholders. Okay, in terms of future strategy then, I think the first thing to say is that Sun have invested into our business because it's a great business, because it has a proven track record of delivering that phenomenal financial performance that I showed you on the previous slide. And that's something which quite obviously they nor we want to change. We want to continue to deliver the fantastic growth, and we simply want to build on that and do more of it through having the capital available to us and some of the things we touched on that previous slide. We've got our first strategy away sessions with Sun during March, at the end of March, where we will be starting to design what, I guess that phrase, building on it and doing more of it looks like. But as I say, this isn't about wholesale change at all. This is about taking something that is already very good and making it even better. So there isn't any sort of significant change in the strategy that we've communicated with many of you before, or that we've communicated with our investors, or those that have sat in on our investor meetings will have heard. The strategy remains, predominantly the same. It's about driving organic growth. It's about acquiring businesses within our existing service lines of business sales, tax and restructuring. And it's about looking for additional acquisitions, now potentially more meaningful acquisitions that could form a fourth or a fifth leg. They are likely to be SME focused, professional business services type operations. Again, we can obviously communicate more of that once we've had the strategy sessions with Sun and once we start to affect that strategy as we move forward. But I think some of you will have already seen, as I touched on before, the increasing investment in our business. We talk about development and training, recruitment technology, our geographical footprint. Much of that is happening at the moment. Training and development, I know up here in Bolton, is starting to change and improve significantly. Recruitment, obviously, and HR with Louise's appointment and the team that's being built there will certainly impact. And again, lots of you will be starting to see technological changes as we invest into technology and hopefully build the business of the future. And I think, as I mentioned earlier, we are really excited about the opportunity that this now brings us to acquire these other businesses and bring other brands in to join our group. That'll add to our capabilities. It will bring value to K3, revenue and profits to K3. And we would envisage that as before, this will be, as I touched on, within existing divisions, but also then developing out in time a fourth, a fifth, a sixth string to our bow. And obviously, as I say, we'll communicate more of that as we move forward. So I think just to summarize that, and finally from me before I pass back to Ian, next slide, Anya, if we can. That's great. K3 for me has always been about growth. It's about trying to make the business next year better than it was this year, make it bigger, make it better. And that mantra has sort of stood us very well over a sustained period of time. But growth, I guess, means lots of things to lots of different people at different levels of our business. But I think just summarising it into three areas. I think growth in our business. So that for me is growth in revenues, growth in profits, growth in success, growth in the value of what we're building here. Growth for our clients, for me, is about providing better, wider, broader services to assist our SME clients, to help us drive cross-sell, to increase client numbers, and to improve the service delivery that we offer across the group. And growth for you as our people is all about training and development, career opportunities and career progression. It's about salary, it's about bonus, it's about benefits outside of that, and ultimately around job satisfaction and enjoyment of being part of a business which continues to perform, continues to go from strength to strength, and continues to be a great business. Okay, Ian, I'll pass back to you if I may.
Great, thank you, John, and thank you for that introduction. You know, on the strategy, and you know, I spent a long time with John and also with Andy over several months. We went through this process, and it was very rigorous. And we're excited to be, you know, part, you know, of Sun now. Now, unfortunately, Paul and Alex from Sun, who I'll introduce on a slide in a minute, were going to present today. Unfortunately, they had to drop out at short notice because they had an urgent trip and they're actually on a plane somewhere at this point in time. So you're going to have to hear Mr. Echo again at the moment, just take you through some slides and introduce you to Sun. So you can go to the next slide, please. So who are they? Well, Sun Capital, which owns Sun European, so it's all the same company. They were founded in 1995 by two guys who actually worked in investment banking, and they really saw an opportunity in the market. It's a business that's headquartered in Boca Raton in Florida. So I can tell you that's on the East Coast. It's very nice. You look it up on the internet, it looks very nice with marinas and sunshine and everything. But it also has, you know, three other major offices in London, New York, and LA. So they have $14 billion of assets under management. So, you know, we're part of that $14 billion. As I said, they've been set up for 27 years, and they've actually, in that time, made more than 475 acquisitions. So that's not just in terms of the portfolios they've got, but all those companies they own buying other companies. And so our history, you know, related to acquiring other businesses was very similar to theirs, and it fitted their type of business. Just go to the next slide, please. So we look at where they're based. You can see they've got 22 businesses in the US, and in Europe they've got 16. You know, more than 40 portfolio companies. We're one of those 40. More than 17,000 employees. So, you know, a big employee base. And you can see within Europe, 8 of those companies are in the UK and Ireland. So a very big presence in Europe. Although they're US headquartered, they really understand the European and UK markets. And you can see across the bottom there the type of areas they're in: business services, consumer products, healthcare, industrial and technology. And business services, which we're part of, is 30% of their portfolio. So they really understand business services as a sector. Next slide, please. So this is the team we worked with. So as I mentioned, Paul and Alex, you can see there in orange. They're London-based. They've actually been side by side with us through this transition over the last few months, and they were going to present today, but unfortunately they couldn't do. Tim is actually one of the partners at Sun. He's head of global operations. He works on the operations with us, so very much on a weekly basis around our operations. And then you can see Sophia and Lucas, who actually support both the transactions and operations. So you don't be surprised if you see some of these team members around here. They're here to help. They're here to make us even more successful, as John said, than before. Next slide, please. No, so this was their slide. You know, why did they think that K3 was a perfect fit for Sun Capital? So firstly, they saw it as a leading, you know, it's one of the leaders in the market, highly diversified. So all these, from business sales to restructuring through to tax, a diversified professional business that was resilient through the market cycle. And that's very clear and important for us, is that irrespective of the economic climate, we are a balanced business portfolio to take the upside irrespective of what the economy is. We had a unique and differentiated go-to-market in terms of business sales. So in our business sales, the business in terms of KBS, Knightsbridge, is really unique in terms of how we are a data and sales and marketing driven business. We do send more than 2 million emails a month, on business sales. So very, very different business model to everybody else in our marketplace, and very strong reputations in Quantum and our tax divisions. We're also a natural consolidator in highly fragmented markets. What does that mean? Well, actually, in our markets, all three core markets, there are lots of different players. But we very successfully being able to bring other businesses and integrate them successfully into our business. And there's lots more opportunity for that in the future. We also have an attractive financial profile. What do they mean? We're actually, as John was saying, we're growing very fast. We're very profitable. We manage our cash very well, which is really important. You'll always hear, if you listen to any of the news programs, when they'll always talk about cash is king, having cash in the business. So we manage our business financially really, really well. And there are multiple opportunities for us to diversify. We could go into a lot of different sectors to support SME clients. And then finally, because they met with quite a few of us, an ambitious and experienced management team that could really help drive the business. So that's why their words as to why they liked us. Okay, so that's some, and that's why they liked us. Now we're going to talk a little bit about the benefits in terms of investment being made, in the business. So myself and Andy are going to talk about operations. I'm going to talk to you, a little bit about IT. So we go to the next slide, please. So first of all, one of the investments we're currently making, and it's in pilot at the moment, so we hope to go live literally in the next couple of weeks, is a new voice over IP phone system. So voice over IP, that's essentially that it's a phone system that works over the internet. If you've actually got at home now, quite often when you've got BT or Virgin or somebody else at home, that's a voice over IP telephone. It's not a wire-based telephone system anymore. And actually, we're going to have a voice over IP telephone system, runs off an app on your laptop or desktop computer. It can automatically integrate into our Globe CRM solution, which powers both the business sales and the RAND tax division and other opportunities we look at from Globe as well. It can save you a lot of time. You don't have to use a handset anymore. You can plan and schedule your calls in terms of your sales. You can integrate your notes when you speak to people on your calls. We can actually record calls, which can be used for training and development by managers. We can potentially integrate it into Microsoft Teams as well, and it enables remote working. So I know, for example, JEC are very keen to get a new phone system in to allow for that remote working that operates, within their business model. So that's in pilot now. We hope to roll out literally within a few weeks, business by business, and that will be a huge benefit across the business and quite a significant investment for us. Next slide, please. You're aware we're migrating the whole company onto one Office 365 platform. Now, why is that important? Everybody's got Office 365 at the moment. It runs across all the businesses, but it runs on what's called tenancies, and we have about 10 tenancies. So everybody's on a different version of it. So by moving everybody onto one platform, which actually takes quite a lot of manual work to transfer everybody, we're going to get improved collaboration. Everybody will be able to see through Outlook everybody else's calendar. So you'll actually be able to book a meeting with somebody from Quantum and Debt Advisory and somebody from KBS and see when everybody's available. But we have one set of Teams because you can actually use Teams to collaborate as well. It also is really fundamentally very important in terms of IT security. Having everybody on one platform makes it a much more secure environment and our ability to invest in that. And talking about security, cyber. So this is a big investment area for us. I think all of you have had the email already about iHasco in terms of the cyber training. I'm partway through mine, so please complete it. Everybody has to complete it from John downwards. But we're also just signed a new deal with a company called KnowBe4, who are the global market leaders in cyber training, and that will be rolling out in the next few months for everybody. We're also investing in a new contract with a specialist cybersecurity company who are going to not only be assessing our cyber scenario, but they'll be continually reviewing and monitoring our IT from a cybersecurity perspective. And then finally, multi-factor authentication, or MFA, is being rolled out to everybody. So some of us have got it already. I've got it. It runs on your phone. It's a bit like when you're doing your banking at home, or you're on Amazon, or your credit card, and now it pings you a special code you need to put in just to confirm that it's actually you. We need to do that as well, because it's very important to be able to know whoever's logging into the computer is actually you. And it's not just in terms of securing the company data, it's all our data, it's all our HR data that's got all our personal data in terms of where we live, our bank accounts, we're getting our payroll and everything. So this is something we really need to invest in, not only in terms of technology, but also our own behaviors and our own responsibilities. And then finally, we're aligning our laptop and desktop strategy across the group. So if you go into any office at the moment, you'll see, probably with the exception of Quantuma, everybody's got different makes of laptops and desktops, and it makes it very difficult for us to be able to collaborate, move from one office seamlessly and work in another office. And so we're actually going to be moving everybody onto one brand of laptops and desktops. And with that, I'm going to pass over to Andy, who's going to talk you through a little bit more about the investment and operations.
Good afternoon, K3. Over the last 2 years, we've invested quite heavily into office space improvements. Rand have got a new head office in Derby. There was a significant upgrade on the previous space in terms of size and quality in order to support their growth plans as a business. And we've done the same in other areas of the business, including Maidenhead and Manchester, with recent moves and renovations. Sun are fully supportive of this planned continuation of these investments. We've recently renewed the JEC lease in the current office in order to secure and improve the office space they've got there. And also we're looking at refurbishing that in the next few months to improve the working environment and reflect the professional marketing service that we provide to our clients, and also to provide a modern home to our people. We also look to create a new London hub for K3. We've identified several properties as targets that will more than double our footprint in London, with exciting modern office space to give more space to allow better collaboration between current divisions, and also for those yet to join the K3 journey. We expect this to be an ongoing process of upgrades over time to ensure all K3 people have got an equally vibrant professional office space in order to operate and thrive throughout the group. Part of these upgrades, we'll look at how we can add further value around the office. Items such as car charging points, various benefit schemes are all being considered to help improve our offering to more of our team. All good ideas are welcome and everything will be considered. The central finance team continues to evolve. There's 10 people now dedicated in our Bolton head office, along with strong support from Maidenhead and other people through the group. In a short space of time, we've built a strong professional team that I'm very proud of. We're working closely with each other and also with business units to provide good quality information to business leaders and help support day-to-day operations. Whilst we appreciate there's been some short-term pain in some of these transitions, we now have all companies on one finance platform being served by dedicated teams and successfully integrated reporting. This now means that we've got accurate information being reported in a timely fashion each month to support the running of each business, whilst also freeing up resource through the divisions and allow each company to focus on their operations and add value where everyone knows best. Similar is what we're seeing with HR and IT, as Ian will touch on. In finance, we continue to look at ways of trying to improve information to each business with new systems, new processes, all to help ease administrative burden and add value wherever possible. As part of this transition, we've also seen payroll being moved to a centralised outsourced provider. We do appreciate that there's room for improvements here in terms of external payroll, communication, accessibility, all of which we're working with Louise's team to help improve this service to employees and make it much more user-friendly. Part of our transition into private ownership will involve more standardised reporting to ensure consistency throughout each division and align us to others within the Sun portfolio in respect of weekly, monthly and quarterly reporting requirements that's expected of us. In PLC Life, focus was generally on ensuring that our 6 monthly reports were improvements on the previous 6 months on a small number of metrics, including revenue, profits, and a short list of KPIs that we published in the public domain. An exercise is well underway to ensure that we've standardised our reporting through each division, and we're working very closely with Sun to lean on their many years of experience of growing businesses to understand their view of the world and support our management. We want to ensure that all people through the group have clear objectives in their roles that we can support in order to help shape reward schemes and incentives. All K3 people are integral to our growth plan, and we want to make sure that everyone is supported and appropriately rewarded for everyone's efforts. Ultimately, there's a huge amount of data that we gather through the group that will be condensed down into a single page document each week that we need to report to Sun. But equally, it allows us to take a step back now and let us think about each business unit to give us a clear path to continue our impressive growth journey together and all benefit from long-term sustainable growth. I'll now pass you over to Louise to talk about our investments into people.
Thanks, Andy. Hi, everybody. So as Ian and Andy have just said, I'm here today to talk to you about yourselves, obviously people, our valuable assets, and our culture and careers offer that's evolved over the past few months. So first of all, we had to start with a people strategy. If we could move on to the next slide. Thank you, Anya. So the Quantum people team and the small but perfectly formed HR team for the K3 Capital Group have worked together to build a people strategy that consists of these 5 pillars that you can see in front of you: HR and compliance basics, management confidence, elevating inclusion and diversity, improving employee and candidate experience, and ultimately all focusing towards developing talent so they can thrive and towards business growth. So what does this really mean? Well, there's been quite a lot of work, particularly over the past few months, focusing on these 5 pillars in terms of the here and now, ensuring we have the right people in the right roles with the right support so they have the opportunity, and every single one of you on the call has the opportunity to flourish and perform well in your roles and enjoy your role. But we're also looking to future-proof our already successful business, where we want to make sure we've got diverse talent, we have excellent leadership, and we have robust compliance and processes and ways of working that means that we can scale. Back to John's points earlier on, acquisitions is really important for us, and we have to be as strong as possible in the here and now to future-proof us for our future growth trajectory. That's a very high-level overview of the key pillars of the people strategy. What I'd like to do now on the next slide is move on to talk to you about some of these areas in terms of what does this look like for you on a day-to-day basis. Well, the first area that we focused on as a collective people and HR team has been on culture and engagement. We've been working, and you will see more information coming through from some of our benefits providers, such as Health Shield, which is our health plan provider. And we have some workshops, virtual and face-to-face, for some of our offices, events taking place during March as part of a wellbeing week, where we'll focus on physical, mental and financial well-being for us all, actually. We'll be promoting the support and services that Health Shield and our life assurance provider and employee assistance program providers can give not only ourselves, but also our families that live with us as well. Very important at the moment to make sure that we're utilising the benefits that we actually offer already here. So you'll see more information about that. We're trying to build our local community links across the group, particularly in terms of the UK at the moment. We hope to expand this into our international colleagues overseas in terms of how we can give something back as individuals and as a business. And one of the ways that we've started that is to have in our offices and in our hubs, we have a relationship with the Trussell Trust, who run food banks across the UK. and we have a kindness cupboard in our offices. You may have seen this sign here, food bank donations, and wondered, what is this? So we're asking people to donate non-perishable food items into the kindness cupboard on an ongoing basis, not just at Christmas, not just as a one-off, but to keep providing anything that we can for those, and then we take those donations to a local food bank. For those of us that aren't based in an office, you can also donate to the Trussell Trust yourself personally online, but we felt it was really important to start to try and show our group ethos by having links to the community across the UK and hopefully internationally shortly as well. So we focus on giving something back. And then the third area we've been looking at here is about the employee experience. Obviously, you are extremely important to us. We want to make sure that you have the most positive experience possible. So we've been looking at both the candidate experience and the colleague experience here. We now have a group-wide approach to corporate onboarding to make sure that all of the lovely new talent, of which some of you are on the call today, know about who we are, what we do, and some of those basic things that not everyone, when they're joining a new business, wants to ask, to make sure that everyone has a consistent quality first impression of our fantastic organisation. We've also undertaken a compliance and health and safety review. Some of you have been asked for various information. You may see some health and safety experts on site in some of our offices over the coming weeks and months, to make sure that we are doing everything possible to keep you safe, and also that you understand your responsibilities there as well to keep yourself and others safe and well. There'll also be some training that's rolling out in terms of health and safety and compliance for us all, to make sure that we all have the knowledge and awareness that's required. We've also spent some time building some surveys for new starters and for those who decide to move on to other organisations. So we've now have surveys running for new starters and for leavers, and soon to be for candidates as well, actually, to make sure that we are gauging the feedback of everyone to make sure that we can make improvements where required. And there's also been quite a lot of work happening, mainly in the Quantimer family, but also across the group in certain areas. You'll hear more about some of this later on, but in terms of our green agenda, sustainability, also diversity and inclusion, there's been some surveys that have been taking place there to gather some feedback to help build a future plan for us. And there's also a specific employer brand working party for Quantimer as well, but we're looking at all of these elements across the group to make sure that we're as aligned and unified as possible. So lots of work happening. That's just a few examples to make sure that we can elevate the candidate and the employee experience for you all. I'd like to move on to our next exciting announcement. We're going to be launching Idea Allies. Well, what's Idea Allies? Idea Allies are inclusion, diversity, equality and awareness allies. And we want to have a group of people that are passionate about diversity and inclusion. You don't need to know anything, you don't need to know the specifics, but we are inviting people, any one of you actually, that are passionate about this topic, to join a group-wide virtual team with myself and Nicola Davis, who is the HR director for Quantimer. And we want that group to focus on certain areas, such as helping us build training and communication and awareness initially, and a high-level plan to push us forward on making sure that we have the most inclusive culture possible here at our international business. We're actually going to be holding a drop-in, a virtual webinar on the 23rd of March at lunchtime, 1 o'clock. So for those overseas, but also those in the UK can join, please bring any food with you to meet with Nicola and I, where we can talk to you a little bit more about the Idea Allies group and what that might look like. We'd be asking people to commit a small period of time every month to attend a meeting, and just to help us shape what that future plan will look like and help drive that locally into teams and offices and divisions. That's a really exciting new initiative for us, and help us cascade comms and training as well. We have a number of things happening then on talent and attraction on the next slide. Thank you, Anya. So Social media is an absolutely crucial part of all of our lives now, personally and professionally, and we are no different here at the K3 team. We have a Glassdoor page that research shows candidates that come to look for any new role. 4 out of 5 candidates look at Glassdoor. It's really, really important for us, and we want to build our social media presence and our platform on LinkedIn, Glassdoor, etc., etc. We may even be using TikTok and YouTube and Instagram in future, who knows? But for now, the focus is on Glassdoor predominantly. We currently have 51 vacancies as at today, actually real-time information due to the growth that we're seeing across all areas of the business. And Glassdoor is really important for us. So we would like to make, we have an ask. If you have something positive to say and you're willing to put an anonymous review on Glassdoor, that would be fantastic. It just really, really helps us with ensuring that we have the right presence and we're shouting about some of the great things that we do here. Obviously, we have areas that we want to develop, and if there's anything that you want to talk to the HR people team about privately, please reach out and do so. That's absolutely fine. But if we could ask you to take a look at Glassdoor, that would be great on the K3 Capital site. That would be phenomenal. The next area I wanted to talk about in terms of talent development is learning and development. So what for you? What offer do we have? Well, Ian's already alluded to part of our new learning and development offer, which is really exciting, actually, a new offer for us. So we're partnering with KnowBe4 for cybersecurity and iHasco, which at the moment, you probably, majority of you only seen in terms of cybersecurity training, but actually that e-learning platform provides us with an absolute wealth and breadth of learning opportunities for us all, actually. So we have access to the whole system for all of our colleagues, and it covers personal development, professional development, it covers management and leadership development for existing managers, but also aspiring managers that want to move into that type of role as well, and a number of different areas. And we'll actually be using that platform to build some internal programs as well that will be cascading across our group. They have a really fantastic reputation, but we're also, we have someone joining us on the 13th of March, a learning and development professional who actually will be able to design and cascade a number of virtual, but also potentially some face-to-face learning and development programs as well for graduates, apprentices, managers, and also colleagues who have a desire to learn something new and improve the way that we interact day to day. So that's a really, really, really exciting offer for us here, to improve. We also have started yesterday, actually, we're also going to be running a rolling programme of manager engagement workshops for all managers and also aspiring managers. So for those of you that want to take part in these workshops, please let us know. We hold periodic topics such as performance management, absence management. We held a recruitment workshop yesterday, and we're going to make those as interactive as possible going forward to make sure that our management population leaders can be as strong and as competent and as confident as possible so that we flourish as an organisation. Thank you. On to the next slide. You've probably seen this before, but it was a great opportunity to remind you about our employee referral scheme. This applies across the whole business. So we obviously want to try and utilise, people that may be looking for the new opportunities to join a growing, exciting, thriving business. Not every business is in that situation at the moment. We are fortunate enough to be in that position. So we want to leverage the people that you know that you think would fit really nicely into our organisation. If you refer any individuals, it could be a neighbour, it could be a friend, it could be an ex-colleague. If you refer any individuals and they go through our recruitment process, which is nice and friendly, I promise, should they go through that process and work for us and pass their probation period, you would receive a certain level of payment for referring that individual between £1,000 and £3,000 or the equivalent in our international territories. It's a fantastic way of recruiting talent in. It's a very difficult market out there at the moment in terms of recruitment, which most of you on this call will probably have seen in the press. And we want to do everything we can to get the right people in that want to be part of the team here. So please, 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 if you know of anybody, please just contact any member of the HR and people team, and we can make sure that we pass them through for the right role. We're also really excited to announce that we are launching a degree apprenticeship program. We have one live already within the sales function in Bolton. We'll be recruiting 4 people starting in September in Bolton, but we're also launching a program in Quantima as well. And we will have a cohort of people that join us and they go through an apprenticeship, but they leave with a degree over a period of a number of years that will rotate throughout various teams within those 2 areas, and also a focus on some projects, and those people will gain their qualification as well with us. So it's a really, really, really exciting opportunity that we haven't done in this way before in terms of a cohort basis. So we'd welcome you to check it out. If you want to apply yourselves, we can talk to you about that. Anyone that you know, we're looking for key talent to join us, and this is just one great way of doing that in a tough climate. And on to the next slide, please, Anya. And finally, you probably see yourself, some of you in these pictures here. We just wanted to end my session today talking about people, just to highlight and showcase some of the phenomenal celebrations that have taken place across the organisation. And I wanted to particularly highlight the great work of the 10-year anniversary from the Quantima team. That was a really superb celebration. It's really great, I think, for us to remind ourselves when we see pictures like this of how much collaboration and connection there is already across the organisation. We want to enhance that, but there's some really lovely activities that happen here, whether it's volunteering, whether it's Christmas events, whether it's service anniversaries, whether it's business anniversaries. There's some really, really, really nice things that happen, and the more connected that we can be, the better. So I just wanted to say a huge thank you, and I'm going to hand back over to Ian now. Thank you very much.
Thank you, Louise, for a great introduction to what's happening on people and culture and HR. And I think, as you all know, Louise has only been in the business for about 3 months, and she's already put enough energy in like she's been a year. So thank you for that. And we're excited about how we're going to help all our team members develop and find great career journeys over the coming years. So now what we want to do is to share with you a couple of highlights around some great collaboration that's happening across the group. You may not see it because you're just working in your own brand, but I'd like to introduce Ian Barton and Simon Bonney, who are both MDs in Quantima, to talk through an exciting case study around cut size. So Ian and Simon, over to you.
Anya, I'm trying to start my video, but it says the host has stopped it. So I don't know whether you can switch me on or not, but if not, I'll just speak to a screen. Hang on, restart my video. There we go. There we go. Thanks, Ian. Yeah, just want to talk through an opportunity that Simon Bonney and I have worked on, which is a business called Cut Size. And this is one of quite a number of opportunities where corporate finance and restructuring have worked together to come up with a solution for a client and develop quite a significant fee earning opportunity. So a little bit of background on this. Cut Size is a vaping business based in West London, owned by LDC. They'd been in there around about 5 years. They're a private equity investor, but the business had largely stagnated and wasn't progressing. So they wanted to cause an exit. So I was approached, because I've done quite a bit of work with LDC over the years, to help devise an exit plan and work with them over a 12 to 18 month period. However, business declined quite rapidly. We did a piece of work for around about 40,000 to come up with an exit strategy and a plan that we would work through. But as the business declined, the CEO left the business, and it was quite clear that there were challenges in terms of cash availability and funding within the business. So I introduced Simon Bonney from our restructuring team to talk to the director group around their options, and also to plan around what we might need to do if things declined more rapidly. The long and short of that was that after that advice, they decided to initiate an accelerated disposal process. And over a 3-week period in early 2022, we made approaches to all the parties that we had identified from our initial piece of work. We used the contact base from that. We used some feedback that we had from McGee's and Julian Coy, who'd worked on Dinner Lady, which was a not dissimilar business up in Manchester. And from that, we got 7 expressions of interest. And ultimately, the best offer that we received was from a listed business called Supreme, which offered the best value, the best speed, and a clean exit for LDC. But for them, they wanted a pre-pack. So they knew the assets they wanted to take, and they knew what liabilities they wanted to leave behind, including property and liabilities and things like that. So we had to devise a sale process and an execution plan that involved both our skills as corporate finance, but also Simon and his team's skills from a restructuring perspective too. So what were the outcomes that came from that? And I'll let Simon talk in a minute around the role that he and his team played. But from LDC's perspective, they were able to exit the business cleanly, the reputation intact, and at a value much higher than they had anticipated they would originally been able to sell it, because we managed to execute the deal quickly and with a buyer who was prepared to pay proper value for it. From the Cuts Ice perspective, it gave that business the opportunity to continue in the future within the Supreme business, albeit Supreme did their own reorganisation afterwards, but it allowed the business to continue in its form. And from a Quantuma perspective, we got our original 40 grand fee for the exit work, but from that, we then got a £200,000 fee for the sale process for a couple of months' work. And then there was the role that Simon played with his insolvency team in terms of executing the pre-pack and the process thereafter. So perhaps, Simon, if I just hand over to you at that point and you can talk through the role that you played.
Yeah, thank you, Ian. I mean, essentially, my role was one of turning up and looking good, which there will be some people on this call that say I'm not very good at doing, but I was able to build on the goodwill that Ian already had with the business, that Quantuma had as a brand with the business, and be able to come in as a trusted advisor alongside Ian in order to be able to provide advice to LDC on how to get the transaction done using a restructuring process. And also knowing that because Ian and I were working together and were able to have strong conversations behind the scenes, knowing that they were going to get the right advice on how to go about getting the exit, and also have trust in us to be able to deliver that for them. And this was not their first foray into insolvency, albeit that understandably they'd rather not be anywhere near it, wherever they can manage it. But actually, we've had a good working relationship with LDC throughout that process, and hopefully from the point of view of our brand, it's only been enhanced by them seeing more skill sets under the Quantuma, and hopefully as we go along, K3 brand. In terms of my side, fees wise, it's a very nice case for us. We've been appointed over 3 companies, and the combined fees over those 3 companies will probably be somewhere around the £250,000 mark. Now, it would have been very easy for LDC to go to a different CF house who didn't have a restructuring side, and it would have gone to some other IP, probably where they didn't have a CF team and a restructuring team together in one firm. But this was a case where, thankfully, Ian had the trust in me to be able to bring me in and to be able to do the job for LDC. give them what they needed, and then hopefully move on to be able to do more work for them, both solvent and, if they have a difficult situation, insolvent. So moving on to the next slide, I think really the themes that came out of that as a case for us, and when we talked about it and preparing for this, was fundamentally that there are kind of 2 or 3 matters which are highlighted. The first is that we've got to trust each other as colleagues to be able to bring each other in and do a job, and know that actually that's the way, both to provide the best advice to the client, the best job for the client, but also to enhance the revenue that we're getting on each different occasion. And it's not the first time that Ian and I have worked together. We've done multiple transactions, and every time we're just able to sit around a table, work together, and figure out what the best thing to do is, and get the most out of those cases. Thankfully, Ian, trust me. Secondly, one big aspect of this business as we grow is that there is more and more knowledge across it, and actually it's more and more likely that we're going to be in situations where we're going to be thrown left field questions, and whilst we may not be the right people to give those answers, the chances are that either we've got that knowledge within the business, or indeed we've got contacts outside of the business who we work with, who will be able to give the right advice, and indeed gain some credit for us in terms of those working relationships. And from the point of view of trusting colleagues and introducing, I think, you know, it's easy in a sense for Ian and I, because we know each other well, we've worked together a number of times, but it's incumbent upon everybody within the group to try and get to know each other better, and also call on people who are probably more involved on the cross K3 brands to be able to pick people's brains and see what comes out. Ian, anything else from you?
No, I was just going to say, you know, these things work both ways as well. This was one where I introduced Simon, but equally there's a case very recently, which I think we're hoping might complete in the next day or so, where Simon had the lead, but he needed some help from a corporate finance perspective to help secure that mandate from an insolvency perspective. So we both jumped on a call for an hour and pushed that process forward. So, you know, it's about that flexibility. It's, as Simon said, it's about trusting your colleagues, but it's about knowing that the answer is somewhere in the group, and picking up the phone to ask the question and asking how we can help each other is the way to move it forward.
Thanks, Ian. And I think, Ian, Simon's back to you.
Thank you, guys. Appreciate that from both Ian and Simon there. And now we're going to go to another collaboration opportunity, which Hayley, who runs the Night TS, and Holly, who's one of the MDs from K3 Tax Advisory, can talk us through. So ladies, over to you.
Thanks, Ian. Afternoon, everyone. Yeah, as Ian said, the next couple of slides just give a couple more examples of how different group entities across K3 have collaborated on projects. So Holly and the K3 tax team are particularly collaborative. So I'm going to take the lead on how KTS and K3TA have teamed up, and then I'll pass to Holly to take over with a few other examples. So, well, apologies in advance if my slide's pretty dry. Ian said we were welcome to make it fun, but I'm not sure how I make a presentation about DD into a juicy type stuff. So for those of you that don't know me well, I'm Hayley Brightmore. I lead Night Transaction Services, or you might hear us referred to as KTS. So we're the only team within the group now that provide financial due diligence services to a range of different clients, from corporate businesses to private equity houses, banks, and other debt funders. Our USP to clients is, one, that we serve the true mid-market. So our deal size is typically up to about 30 million, maybe 40 at a push, but that's not where the Big Four or GT, BDO, RSM want to be. And then our second is that our reports are focused and tailored to our clients and their credit committees or their funders' exact requirements. Holly, do you want to say hello from the tax side?
Yeah, hi. Here we are. My video is now going to work. There we are. Yeah, hi. I'm Holly Bedford. I'm one of the MDs at K3 Tax Advisory. That's K3TA, and part of what we provide is tax due diligence services, and so obviously a very close match up there with Hayley and her team. They do the financial part of it, and we do the tax part of it. And since we've got together within the group, I think we've helped each other out a lot by being able to offer that combined service to clients.
Lovely, thank you. So at KTS, we've introduced the tax team, I think, to clients on, I had a check just before the call, about 20 transactions now in our first 18 months since launching, which has generated, I think, tax DD fees of around 100k. Likewise, the tax team can also help us out by introducing us to their clients. So where they might have done tax diligence on a project, but they've used another FDD provider, for example. So in hopefully under 5 minutes, I'm just going to run you through a specific example of how we've worked together and the typical benefits of that to the client. So in this example, the client was actually a Sun Capital intro. So as John touched on earlier, Sun Capital have started to introduce us to their wider portfolio client base. I was introduced to the management team of a portfolio business by Alex Wyndham. The project's still live, so I won't go into that much detail on client and target names, but the target business was a supplier of pharmaceutical products, mainly to the cruise industry. So I had a call with the management team where I introduced ourselves, our FDD services, and explained that we can also cover another diligence stream, being tax. Off the back of the call with the client management team, I introduced Holly and gave her a steer on making sure that they got a decent fee for it, given that I had an idea of what the client would typically pay. Our joint deliverable, is an FDD report, which includes the tax section, and that's all formatted so it looks like a joined up product. The communication that we have between the KTS team and K3TA throughout the process means that we can make the tax team aware of any potential tax red flags, so furlough issues and things like that. So they get picked up quickly and action quickly, and they can communicate to us any quantifiable tax adjustments that we can then add into our tables when we're trying to reflect the deal mechanism. Feedback wise, the feedback we received from this client was excellent. When I caught up with Alex, I'd also fed that back to Sun Capital also, which was great. I think providing a joint FDD and tax DD service is definitely an approach that works. Holly and I were in London a couple of weeks ago now, and we had feedback from both Morovia and Rockpool, so two London-based private equity houses, that our reports were some of the best he'd seen from a range, I think it was 10 to 15 different providers. So just to summarise, the benefits of working together from a client perspective is hiring a firm that can do combined FDD and tax DD means that the client has increased efficiency from having one less diligence stream to manage and to worry about. They get a higher quality, more considered report, which will likely directly result in a positive impact on the price that they pay. And all of that is due to the relationship and the communication between the two different diligence streams throughout. From an internal perspective, the benefits are the ability to win more work and potentially get higher fees by offering a combined product. The benefit of leveraging our relationships and respective client bases and continually promoting each other's brands. And finally, like I say, just producing a better quality, more joined up diligence report. Then I'm just going to use my last 5 minutes, I think, if I've not already used it, to make the most of being in front of everybody and just saying if everybody on this call could consider their client advisor relationships, and please drop an email to any private equity contacts or acquisitive businesses that you know to introduce us. So I think if everyone on the call, 400 and odd people that are on here, did that just to their one most relevant contact, the impact for us at KTS would be absolutely huge. So yeah, Ian and Anya, if you could add my email address to any material that you circulate following this, that'd be great. And likewise, I'm happy to circulate redacted example reports and cred packs if anyone needs that. Okay, that's me. Holly, I'll pass over to you. Thank you.
Thanks, Hayley. So I'm moving on to the next slide. So this is a bit more about how we are working across the group with different entities within the group to, provide a great joined up service. What I'm talking about is EOTs. Some of you might have heard of those. It stands for Employee Ownership Trust. And pretty much the way we use these things is that they are a different kind of purchaser for the companies that we're selling. Instead of selling to a trade buyer or private equity, you sell to this trust, and the trust is there to benefit the employees. So it's kind of a bit of a special scenario because we are the seller, but we create the buyer as well, which obviously has all sorts of advantages in a deal process because it's much harder to argue with yourself. The great thing about what we've done here with EOTs is that the KBS businesses sometimes ended up selling to trusts. Quantum of Corporate Finance was starting to look at them for for alternative buyer. Knight Corporate Finance were doing something similar. And then we have, the K3 Debt Advisory who advise on debt. And whenever you've got a sale going on, you're usually looking at some debt as well. But by all of us coming into the group together, and I think us coming in as well to add the tax element to this process, is that we've managed to kind of supercharge it within the group. And whereas we had a few people looking at it, a few people trying to work out how we could make this thing fly, we've managed to start working very closely together across those companies. And now we've got a lot of these transactions going on. So I think I have 4 current, and I know we are talking to quite a few other people about moving into this this kind of structure at the moment, and it's something that we're looking to develop more going forward. I've put one name up there, which was Intech, which is the only one we've actually completed so far because they do take a while. That was a Quantum Ian Barton client who sold to an EOT last year. And then I've got 2 just in initials there that we are working on at the moment. There are a few more. And the introductions come in from different places. Sometimes, like I say, it's a corporate finance transaction that's kind of stalled or failed. Sometimes it comes in from lawyers who we work with, and sometimes from accountants who've heard of these things. They think they might be a good idea, but they've got no idea how to make it work. And what we've managed to offer clients is a real one-stop solution. So if you think about it, when you're selling your company, you need, one hopes you need a corporate finance advisor to help get the best outcome for you. You need tax advice. You need somebody to raise debt to fund the purchase by the EOT, and you need lawyers. We can't provide, we're not lawyers, but we've got very close relationships now with lawyers who do the EOT thing. So if clients are interested in this, we can just give them everything they need in a seamless package. And although we do have, the different branding, we all work together as if we're working in one company, one team. We all talk to each other constantly on the transaction. So for the client, it's completely seamless, and we can just deliver them what they want in a very efficient and painless way. And also the fees are pretty good. Probably, KBS, who are used to some incredible fees, might think they're not very good, but for the rest of us, they are some pretty chunky fees, and we can get the transaction done quicker than we might be able to do on a normal third-party sale, where I say you've got that, it can drag with arguments and deals can fall over. It's very unlikely an EOT is going to fall over once we've got into it and got going. So that's pretty much all I've got to say on the EOTs. It's just a great way that we've got K3 Debt Advisory, different corporate finance firms within the group, and us at K3 Tax Advisory all working together really closely on these. We're not having to refer out of the group at all now, apart from for the legal fees. So we're keeping more of it in, but also we've managed to, like I say, supercharge an offering that we were all kind of thinking, how can we make this work? And we've only been able to do that because we're all working together on these projects. And that is me, and I'll hand back to Ian.
Thank you very much, Holly, and thank you to Hayley as well. Great insight there on collaboration. Now we're going to talk a little bit about ESG. So Adrian, unfortunately, I'm going to ask you if you can be speedy on this. Just we've got a few minutes left for Q&A. We'll probably run over by 10 minutes so that we can answer some of the questions you sent in on Q&A. If you need to stop at 1/2 completely understand. This whole meeting's been recorded, so you'll be able to listen to the Q&A, in your own time. So, Adrian, over to you.
Thank you, Ian. Afternoon, everyone. Yes, I'm last up, so I shall try and be brief. One quick clarification point. So, as Ian mentioned, ESG covers 3 disciplines. My focus on so far, and what I'm talking to you about this afternoon, is just the E. I couldn't get on with the rest of the letters yet. I'm going to talk to you about why this is important, what we're doing. Excitingly, we've got the results of the staff survey. We're going to talk about next steps and then some easy, quick wins that we can all look at. So why is this important? I think partly this is probably self-explanatory. There's an awful lot in the news at the moment, sort of a bit of a global scientific consensus about climate change and the damage and all that sort of stuff. So that's fairly obvious. But why is it important to K3 and the group? Clearly, this is significant to our team members, and we know this from the survey. And to our other stakeholders, who might include not just our existing staff, but also future hires. As Louise said, we're currently hiring for 51 people at the moment. A lot of those people will be asking questions around what we're doing in terms of our responsibility towards the environment. Clients may start to ask. Certainly larger corporates and also government bodies have requirements around this when we're pitching. And then also our new owners, which I'll come on to in a moment. We've also got, the law is changing. We are now a large firm, more than 600 staff. We're 25 or so offices, I think, globally. We already have reporting requirements in terms of our carbon emissions. Those requirements are only going to get stricter and ultimately lead to action being required as well. And I think it's probably fair to say that K3, we would rather be ahead of this rather than be one of the laggards and find ourselves being legislated against to make us change. In danger of sounding a bit preachy, but maybe we ask, is there a moral imperative here? Although we are growing and our footprint, our carbon footprint has grown a little bit, that we aren't Shell. The reality is, even if we went right the way down to 0, it wouldn't make a huge difference. But I think, we need to take a view about doing the right thing and seeing ourselves as being part of the solution, even in our own small way, rather than being, a part of the problem. And then finally, Sun Capital, absolutely. So they, their investment criteria within their portfolio means that they have ESG obligations, and as a larger investment fund, they also have their own requirements. So I could sort of summarize why we're doing this as in to say we want to do it, you want us to do it, and we have to do it. So what are we doing? Just briefly, we've been doing an awful lot of research into this. What are the rules? What are our obligations? What's possible? And maybe what are our peers doing? We're also doing measurement. Obviously, if we're trying to move from sort of one output figure for CO2, we need to know what that is so that we can plan and look to reduce it. We've done the staff survey, which I'll come on to in a moment. We are pulling together a carbon neutral plan, which sort of explains in a bit more detail literally what we're going to do. We've identified a few easy wins, which I'll summarise right at the end. And we also have a fantastic green team, which comprises now about 20 volunteers across Quantimer and K3, who are ably assisting me and some others in trying to actually make some progress in this area. I would note one thing on this, actually, please. So although we've got Quantimer and sort of the KBS team up in Bolton, we need to get some volunteers from some of the wider K3 group companies. So do expect to see an email from me and some of the team over the next week or so to ask if you are up for volunteering. Right, very exciting. And the next slide, the survey results. You've been waiting for bated breath here. So look, thank you to all of you who took part. This went out quite a few months ago now with Quantimer, and I've sort of delivered the results to those guys. More recently to KBS team. Really high response rate. I think we've got something like 60% response rate on both groups, which is fantastic. So thank you to all. We knew we were likely to see people being sort of concerned about this and wanting the company to do something about it, but I think we weren't necessarily expecting the extent to which this was a concern for you all. So I've sort of, you may remember the survey was sort of 1 to 10, so I've tried to sort of summarize that in, being extremely concerned, highly concerned, so on and so forth. First question, was, to what level are you concerned about it? And as you can sort of see from the pie chart quite quickly, 92% of you are at least concerned, highly concerned, or extremely concerned. So look, clearly it's important. And there's a message that we have received loud and clear. We asked how important it was for the group to go carbon neutral. Similar result there. So 91%, think it's at least important, if not highly or extremely important. And so, again, that drives into the why that I was talking about a moment ago. 2 more questions I'm going to summarize here, which are on the next slide, please. So we asked, were you willing to change your behaviour? That's a bit of a vague question, I will admit, but nevertheless, 93% said yes, willing, highly willing, or extremely willing to change behaviours, whatever that might look like. And obviously that will feed into, determining what that looks like will feed into some of our plans going forward. And then the final question was just a bit of sort of research, I suppose, on our part in terms of how do people get to work. At the moment, we're not obligated to report CO2 emissions from staff travel to and from work in our numbers, but that is coming. Look, we've got a lot of offices that are sort of spaced out around, even within the UK and certainly overseas. It's no great surprise that the biggest method of transport that you guys use is your car. There's not a huge amount we can do about that, but it does, again, it feeds into how we're going to try and lower our emissions going forward. So next slide, home stretch, everyone. I'm nearly done. So what's next? What's next in the plan? So we're going to formalise this program of measurements. So at the moment, we're just trying to work out, where are we at? But actually, we need to, when we're working with accounts to do this, start producing monthly data in terms of where we're at, and that's going to start showing, how we are successfully achieving our journey to reduce our carbon emissions. We need to conclude on some of the costlier options that we can look into. That might be electric car schemes, that might be, bigger changes to certain offices to try and make an impact. It's sort of the, we're coming on to the easy ones, which don't cost so much in a minute, but there's some decisions to be made on the bigger stuff. That will lead into our more detailed and costed plan to reduce emissions. And now offsetti is not a new form of pasta. I've also not had my lunch. I think that's meant to say offsetting our carbon footprint. The reality is we can't get it to zero. That's impossible. So of course, part of it will be paying to use legitimate offsetting schemes to get us to zero as a company. And all of that will lead into policies being set, which we can use to help drive our emissions downwards. So finally then, what are the quick wins we can do at the moment? So obviously recycling. I think all offices have got recycling facilities, so really it's just a question of making sure we're using those as best we can. Do we understand what we can't recycle? I think there's still quite a bit of stuff ending up in the wrong bin and lots of stuff. I think most of us probably are quite good at recycling at home. I think the ask there is just, can we bring that behaviour into the offices as well, please? Office temperatures, it's been a pet topic of mine for a while. I won't bleat on at people here, but I think the ask is, can we just be sensible and sort of considerate of colleagues, the climate, and also costs when we're sort of setting the air conditioning or the heating. Switching utility tariffs, so as they come to an end, obviously moving on to green tariffs is quite a quick and easy win. As is things like LED lighting, it's a little bit of a cost, but it's not hugely expensive and actually can quite quickly reduce some of our electricity usage. And then there was chat earlier, obviously, about the potential of moving offices. We have moved offices, we are moving other offices, actually. So setting a criteria on a green basis is helpful because a lot of our estate is rented. And so we are limited in what we can do to some of the offices. So when we move, if we set the right criteria, we will end up improving our green credentials as a byproduct. And that, Ian, is me done. Hopefully that was quick enough.
Thank you, Adrian. That was great. And also thank you, Adrian, for leading on the Green Initiative. Adrian's hugely enthusiastic. In fact, we had to say to him, let's just stick to the stuff we can do at the moment. But I know he's got lots of ideas and lots of plans. Thanks to the Green team as well, 20 strong at the moment, but we are looking for volunteers from other businesses. So please talk to your manager if you'd like to participate, because we want to make this a company-wide initiative. Now, I do realise we actually have reached the end of our allotted time. It took a bit longer today because it was our first town hall. So if you need to leave now, or if you're in Singapore and you need to go to bed, completely understand. If the exec team's still available, I'm just going to ask them if they can stay on for 15 minutes. We will try and get through some of these questions you submitted in the Q&A. And if you've got to leave now, no problem. Thank you very much for joining. We really appreciate it. And we really appreciate everything you do for this business. This business is a people business, and we wouldn't be anything without you. So thank you very much. But we will record the next 15 minutes of Q&A. So if you are able to stay on, great. If not, completely understand and listen back at your leisure. Okay, so if I could ask the exec team, if you could put your cameras on and come off mute, and if we could also just get rid of the slides, that's fantastic. We've got a lot of questions in here, so I'm going to go through a few of them and consolidate them. So we had 2 or 3 questions, first of all, around the same subject, around strategy. So I'm going to read out one, I think probably, John, this is one for you. So what are the acquisition and expansion strategies for K3 going forward? To the extent you can reveal, details such as the service lines, the jurisdiction, and the financial targets, we'd be looking at.
Okay, I mean, I think I probably touched on it a little bit in my section, but our acquisition strategy at the moment is not really significantly different than what it was as a PLC, other than probably the fact, as I think I laboured on, is that we've got deeper pockets to buy bigger businesses. But our intention has always been to buy SME-focused, professional business services offerings, well-run, well-managed, growing businesses that are in their own right and that can potentially do better as part of K3. And that still remains the case. In terms of geographies, they could be UK, they could be further afield. As we touched on, we've got the strategy meeting with Sun at the end of March to develop that thinking out further. But yeah, more of the same. So within our existing 3 service lines and divisions, outside of those, in terms of putting a 4th, 5th, 6th leg on, maybe in time. But yeah, nothing has significantly changed there, other than us having more firepower to do more of it.
Great, thank you, John. So I've got a question, or 2 questions here around the share scheme, the save as you earn, and also the growth shares. I think this question for you, Andy, in terms of what's the process around the share scheme, and also when can people expect to get paid out for the share scheme or the growth shares?
Yeah, no problem. So in terms of the Save As You Earn scheme, if we take a step back, for the last 3 years now, we've offered this Save As You Earn scheme, where individuals are able to put in a certain amount every month into a savings pot. That scheme came to a close this month, so final payments will have been taken from everyone's wages this month. During the course of the last 3 years, all the monthly savings have gone into a pot. What that means is that shares are effectively bought at the agreed purchase price when the scheme was started, whatever that was over the last 3 years. And in turn, all those shares will be then acquired by Sun. Actually, as Louise was talking about people, we actually created around 200 shareholders. The shares were issued and sent out, so that was good news there. Equally, whilst Adrian was talking about ESG, I've had an email to say that those shares have now been acquired by Sun. So to give and take away. But that scheme is now closed. Global Shares are our registrar for this. Over the course of the next 5 working days, they will process payments. So everyone who's in the Save As You Earn scheme will have provided bank details. So the full £3.50 per share will be paid to individuals in the course of the next 5 working days. In respect of growth shares, LTIPs and other shares, that's done slightly separately. That's registered by ourselves in-house. Those were issued and transferred over the course of the last few days. K3 has received funds today, so over the course of the next few hours, we'll complete the funds flow and hopefully get that out today.
Great, thank you, Andy. Okay, another question. Are there plans to open any new offices, such as a K3 office in London? So I'll partially answer that, and I'll ask probably Carl to add on as well. So London is an incredibly important location for us. We have quite a few of our businesses either based there or leveraging facilities such as the Quantum office. And we do see London as a key for the future. So we want to try and establish London as a second hub, just as we have our headquarters here in Bolton. And we're looking to see how we can actually, achieve that. So I don't know, Carl, if you want to make any comment, because, the Quantum is the large office in Holborn Road, isn't it, in London?
Yeah, very briefly, interestingly, we weren't looking to move. We've got a lease which I think is in situ for another 2.5 to 3 years. We had the ability to break the lease, break clause coming up. The Knights team, I think their lease expires sometime this summer. So knowing that, we decided to have a look around. Amanda Carcock has done a terrific job, identified, I think, on 20 odd potential offices. Boiled it down to 3, which Ian, you've seen. I saw those along with Simon Bonney last week. And I think it's pretty likely now we will be looking to make a move into new offices, which I can tell you are a lot smarter than the current offices we have at High Holborn. We haven't decided yet on which ones out of those 3, but they're all either fairly close to where we are now, or there's one actually just closer into the city. So I think for going from a position of not looking to move, I think we're now probably firmly on the page that we will be looking to move out and into nicer, brighter, larger offices probably within the next 6 months.
Super, thanks, Carl. Yeah, and I think that the key point is that we want people to be able to collaborate. We want people in the same space, so bringing the other businesses into one space together, the Quantum team, I think is really important. Okay, so here's one I think for Louise. Why have we got so many vacancies, and what are we doing to fill them?
Great question. It's probably easy to ask what we aren't doing to fill them, honestly. The reason we have so many vacancies is due to our expansion and growth, honestly, across the group. And we have opportunities across a variety of different areas, specialisms. So the HR team, mainly the recruitment team, actually are working really hard in a number of areas. Obviously, we've talked about the employee referral scheme, but a significant majority of the recruitment team's time is actually spent proactively trying to find candidates that haven't applied to us. Applicant numbers of all roles across all businesses, not just us, is down. So therefore, we have to punch smarter. So we now use CV libraries, we use social media and LinkedIn to try and find people that would be a good match for us in terms of skill set, but most importantly, team and culture fit. Contacting those individuals and talking to them about the opportunities we have here to see if they're interested. Just to give you a bit of a window into that, during January, the recruitment team proactively contacted just under 2,000 people for our roles. We had about 45 roles during January, so it's a big role. We're also building relationships with training providers, schools, colleges, universities, attending careers fairs. We're looking to improve our whole candidate and onboarding experience and social media presence. It sounds a lot, but actually they're all really, really, really core key components of trying to drive us to make sure that we fill those vacancies due to our current growth and everyone has a great experience.
Great, thank you, Louise. I think here's a question for you, John. Will the Sun team be managing our business?
I mean, the quick and easy answer is no. I think, again, I covered it probably in the slides. The management of the business, as far as anyone will see, stays exactly as it has been before. All 50 shareholding managers, directors have rolled and continue in the previous roles. A lot of you probably won't ever come into contact with Sun. We will be reporting, as I touched on, performance across the different businesses and brands and at group level into them on a weekly basis. And we'll be sitting down with them regularly to review strategy and how we are progressing against that strategy. But no, they won't be managing the business. They won't be sitting on the board. The board will remain as is, less the less the chairman and non-execs that we needed as part of being a PLC. And we carry on as per, yeah.
Thank you, John. Okay, so we've got one here. Can you tell us if the central service lines currently set up for some of the individual businesses will be harmonised across the group, and if so, what will they look like? So I can answer on that one. So we've already centralised the finance team, I think, as Andy has talked about, and that's really grown from strength to strength. On IT, we brought the team together. So we actually now meet on a monthly operations team. So Nick Bacon and John and Max from Quantima, together with myself and Andy and the team from ASL, and also Gary from KBS. We've also just appointed, it's just literally starting this week, what's called a fractionals, that means part-time Chief Technology Officer. So John Tattershaw, you'll see him. So John's going to come in and actually really help us around strategy. So we have quite a linked team around IT. And then, as Louise has talked about on HR as well, Louise has been coordinating and leading the team on HR. We've got quite an increasing team as we actually try to expand not only our recruitment, but our training development capabilities. And that's an area we look to increase as well. So our intention is to try and provide connected and joined up services across the business, and also for new acquisitions we actually make as well. Okay, so if I go, I think this is a question, a live question that came in, I think probably for you, Andy. Do we have the intention to merge offices?
I think we've already touched on that. Clearly, as part of the new London hub, we've got a consumer team down there that will be looking to exit Holborn. I think Cal mentioned a few names looking in terms of the office that have done a great job from consumer. Adam's also been quite heavily involved as well in looking at the new offices. So the idea of merging the two of them together to have one central hub in London with consumer, with Knight R&D, equally for the guys at Intax, K3 Tax Advisory, an office space for the debt guys and whoever else that may be, I think is a clear intention. As it stands, we've got no other intentions of merging other offices. Clearly, as we make acquisitions, it depends on the location and best fit. But for now, there's only London that we think is a good fit for consolidation.
Okay, thank you, Andy. Another one for you, Carl. Do you envisage opportunities for Quantima employees to transition to roles in other K3 Capital Group companies?
Yeah, absolutely. I mean, I think that's always been my ambition, to create an environment or a larger business where it creates opportunities for everyone in our business to progress and develop their careers, whether that's within the Quantima business or now, because we're a much larger business elsewhere within the group. Absolutely. And you know, Louise, I know that you and the HR team are looking to actually ramp up that side of things to help anyone who has actually got aspirations to do something slightly different. So yeah.
Super. Thank you, Carl. Right, technology. You talk about investment in technology as part of the driver around the investment plan. Can you share which practical client-facing areas you see this in? So I'll take that. So obviously, as we talked about, we're at the moment focusing around operational technology like Office 365 and cyber, and also the phone system, which is a big change for us. I think as we move forward, we'll be looking at more technology investment in client-facing. So, for example, in RAND at the moment, we've had in development probably for about 12, 14 months now, a new piece of technology to support case management and also clients. I would anticipate, and I'm sure you've all read in the papers about new AI technology and ChatGPT, etc. Those types of technologies we'll be looking at as well in the future. But at the moment, we're really trying to improve the operational and collaboration side of the business, which we see is really foundational for us to be able to move on to that next level. Okay, so next question I think is for Louise. Will we have access to the same employee benefits across the group?
Great question. So this is an active topic and will continue to be so in terms of benchmarking what we offer. We have different businesses with different employee needs, and that is something that we will probably always have as we grow as well. So it is something, it's a live conversation at the moment. One of the key areas we're trying to focus on in the here and now is actually trying to promote and utilise the benefits that we do actually offer across our businesses. The utilisation is relatively low, actually. So our first priority is actually to talk about and to promote the benefits that we do have, whilst also trying to learn from the other organisations and scope a plan and a way forward.
Great, thank you there, Louise. And I think we'll just fit in one more question. So I think it's perhaps finished with John. Do we anticipate the economic climate, or the current economic climate, which I guess is the one that's in the news all the time, to adversely impact our business?
Okay, I mean, it's a big question probably, but and one that I guess if you knew the exact answer to, you probably wouldn't be stood here now. But the reason and the key driver for building the group that we've built, which is a diverse group, as we've talked about many times, with revenues from 14 different brands across 3 different divisions, is that it gives you and builds in a degree of defence against that economic cycle. You know, people would always say that in good times, business sales would do well and restructuring would not do so well. And adversely, in times of recession, business sales wouldn't do so well and restructuring would do very well. You know, we think across our group as a whole, we have the resilience and diversification that makes the group very strong. And I think our financial performance over the last 3 years, 4 years, in face of some of the challenges that I touched on earlier, has certainly proven that. And I think as we move forward and we build further brands and further diversification into our revenues and profits, then we only add further weight and strength to that argument. So listen, can I always promise that every business will do more than it did the year before? No. But do I feel that year on year our group will grow, will expand, will develop, and will become more and more successful? Then the answer is yes.
Great, and a great way to finish. So I'm going to close off now. We had a few more questions. We'll try and circulate some answers so you can see those. Thanks for everybody who submitted those. Thanks for taking part and taking time today. We'll be holding one of these every 6 months. You'll also see a newsletter in between every 3 months. And we really want to create this as a dialogue. This isn't just about us presenting to you. This is about having a dialogue between us. So please do take a few minutes to complete that survey. It really will help us build for the future. In the meantime, thank you very much. We really appreciate your time, everything you do this business, and we'll see you all again soon.
Thank you all.
Thank you.